what we advocate here at Financial Issues is not to try to time the market. It makes me cringe every time somebody says, should I wait until things get better? Well, how do you know that they will? You really don't. So the idea is to get into a disciplined strategy. If you're not in and you're with whatever money that you want to be in, come up with a strategy. If it's over the next 3 months, if it's over the next 6 months, the older you are, the younger that you are, it doesn't really matter, because if you're looking at 20, 30, 40 years ahead of you before you're going to need to use that money for income, it's not going to matter if you bought on the absolute highest day of the market this year. In 20, 30, 40 years, it won't make much difference at all. Now, if you're closer to needing, or you're actually in that stage of life where you're using income off of your investments, you want to be a little bit more cautious. So you could go in, right now, I would say plan to go in over a 6-month period. Just take whatever money that you have to invest divide it by 6, and today do 1/6. 1 month from today, do the next 6. The next month, do a 6th. So every day on the same month. If you start to see the market drop significantly, if it goes down, I would say more than 10 or 15%, maybe you accelerate that plan. If you're just getting started, maybe you move a third or a half of it in, and then continue dollar cost averaging from there on out. But that's going to give you a really smooth first year experience. And that's important for establishing your emotional basis, because the thing that we have to do is we have to not let our emotions drive our investing. That's what happens with the market, because you see the market moving drastically one way or the other all the time. And in the short term, the market is driven by 2 things, and that is fear and greed. So when greed is high, you see the market just going up. You see that in bubble circumstances all the time when they're saying, oh, evaluations are high. Means that companies are selling for more than what they're really worth. The enthusiasm is there. People are just throwing money in left and right. FOMO, fear of missing out, is at a height. And that's when greed is really driving everything. On the flip side of that, when things are really bad, you hear the sky's falling, everybody wants to get out. So both extremes produce not really great results. Being disciplined is the way to go.